Hello everybody, Mike Arnold here, co-founder of Pat Trading Partners along with Bob Iacchino. So, gap down today in Tesla. Not filling the gap to the prior day's close, last Friday's close, but filling the other gap we've talked about repeatedly to the open on July 2nd. And also we have our trend line, and this was the defining point for the trend line. We've talked about defining points before. If you don't know what they are, please check out our series of videos on trend lines and how we draw it and what a defining point is. So that line was in place since July 3rd, because that's when that defining point was established. Coming up and retesting that trend line, filling the gap, finding the key support. Area now I'm watching for, what we're watching is about 227.50. We have a 50-period exponential moving average there. Just above there we have the 8, which forms the rotation zone, the 8 and the 21. And we have a GAN level there. Right above there we have the trend line. So this is a major area of support. And I'm looking at the bottom aspect of it, about 227.50. If we get through there, then I'll be watching another key area of potential support is a defining point, support or resistance. In this case, since it's lower, it would be support. Coming at the bottom of the rotation zone, the exact point of that defining point is 222.22. So we're just going to go right around 222.25 is the key level. If we break that, we'll be watching for this little GAN cluster around 217.50. And that's the upside. Getting through today's high. So if we start trading up tomorrow above today's high, then we'll be watching for this still gap close, which would take us to 233.10. Above that, then we're watching. So you have 233.10 and 233.50. This 12 and at this GAN level, the 12.5% retracement. So I go with for the upper target 233.50. Once we get through 10, 233.50. Above that, then we're looking for about 238. Then we'd be watching for a return to the swing high 241. So we have for you for all the key levels, the upside and the downside. And for further clarification, why we list the levels to the upside and the downside is because we don't know what's going to happen tomorrow. Now it's trading with the rotation zone. So on the daily chart, we are with the rotation zone, so that is bullish, and it's pulled back to it. So the bullish case would be to break today's high, and then we'd be watching for the upper levels. The bearish case would be to further travel in the rotation zone. So again, if we go through to 227.50, we're looking for the bearish case, and I'm watching for the lower levels. Now, longer term, we're still bearish. Why? Because we're against the weekly rotation zone. So we're in the weekly rotation zone. We've not broken above it, so we're still bearish on a longer term basis. Still slightly bullish on a shorter term basis. We were more bullish, but now we have a higher high, we have a lower high in RSI, so we have a divergence forming. It's now pulled back. If it can't sustain these levels, then we'll start going more to neutral, and then if we get below the daily rotation zone, we'll start going to bearish on the daily and bearish on the weekly. Hope that helps some of you understand what we are doing and the way we analyze things, and we'll talk to everyone soon. Bye for now.